Hey guys, welcome back. In today's video, we are talking about how shorts are losing control, mismarking trades, exposing naked short data, and many more in this video. First, we're going to look at this. And now that the golden divergence emerge, when AMC moves north, while Nvidia and other securities used as collaterals for AMC short positions move south, and VIX suggests market makers are gradually losing control. So when you take a look at this, what we saw was a very heavy red day. When you want to know the total amount, over $1.75 trillion was wiped out from the US stock market today. Now, if you were to take a look at AMC, what you will actually notice was at the very start, AMC was actually going up, despite, of course, the whole market sell-off. Now, we did actually end up the day with down 2.61%, but I want to go more depth into that as of why. But what we can see right now is the evaporation of these collaterals that was once used to obviously push AMC down are now all evaporating to zero. Like we talked about, over $1.75 trillion was wiped out. Now, firstly, this obviously lets you have an indication of truly how much money is obviously flowing in the market, but it's also understanding how much money these institutions who relied on these value are also losing out on right now. Furthermore, if we take a look at GME as well, you can see GME has $5 billion of cash, and in the near future, many valuable assets will be trading at distressed valuations. This is exactly the situation Berkshire Hathaway was decades ago. Not yet, because market will keep dragging down GME for a bit still, but I'll be back into it big. So the same obviously applies for GME as well. Like we talked about, all these markets are going down right now. They are all obviously losing a lot of value. And this isn't just for, of course, the stock market. It's obviously reflecting the economy as a whole. Now, when you take a look at who's going to be doing well, well, we know that institutions, that banks, they are all losing money. But GME, AMC, they are actually obviously gaining money. So we've seen with how AMC, obviously with, of course, the lawsuit, how that's going to give us extra cash, and obviously how the fundamentals are slowly leading towards that path of course, profitability, of making more money. And of course, with GME, the $5 billion worth of cash. And so we are both in very, very good positions. For GME, with the $5 billion, of course, right now they're collecting interest. Now, maybe in the future, whether they decide to invest the $5 billion potentially in some sort of business structures that they have, or in other assets, but because it's going to be extremely distressed, they'll obviously be able to make a lot of money. And that itself will obviously bring the value up as well. So this is to really highlight the opportunities that are going to be there for AMC, for GME. And this is why the shorts are, of course, panicking. Now, to go on more about in terms of why we saw AMC actually up today but then dragged down, firstly, you can see this. You can see still buying AMC after all these years, 100 AMC on the lit exchange. So the reason why people are seeing AMC go up is because people realize that AMC is extremely undervalued. And so just like we talked about with distressed assets, AMC is definitely one of those. Now, it's a distressed asset for multiple reasons, whether because it's not reflecting the real value, whether it's because it's being suppressed, etc., etc. It's all showing that it's a distressed asset. And so we're continuously getting retail investors and anyone, in fact, even institutions, to be buying into AMC, to be buying into GME. Now, the more important part is where are these orders going? So for this case, obviously this user has put it and bought it from the lit exchange. But if you see this, if you don't route through the lit exchange, Kenny will just send them buy orders into the dark. Now, this is a very good replicate of understanding what was happening. So you can see this particular green candle. Now, this obviously shows there was a large buy volume, and you can see how the price spiked up. But the more important thing comes afterwards. You can see these tiny volumes that comes afterwards, yet the price gets dragged down, actually stays down. And so this is what we talked about with the minimal effort shorts use in order to bring AMC down by simply not putting orders through the exchange, therefore not having buy pressure. And so when we take a look at this in terms of understanding, while AMC is going down along with the rest of the market, the difference is that other securities are being sold, therefore their price is going down. AMC is being bought, but because the orders aren't routed through the lit exchange, the price is going down. And so these are two fundamental differences that we have to obviously make clear here, and is why the price got pushed down. You can also see here, did my broker mismark my option order as a sell in the ticker tape fill order book based on my trade record timestamp fill and the volume to timestamp fill book provided in 4 documented sources in this picture? My fill order is not represented on the tape. Now, I highly recommend anyone to obviously take a full look at this and obviously come up with your own conclusion. Don't just take this for, face value. Obviously make sure, and again, as always, none of this is ever financial advice, so do take out some kind of so make sure you do your own due diligence and research. But essentially what we're seeing is how this particular order was, being mismarked. And this is something that we've seen plenty of times in the past. We've seen how Citadel has mismarked long trades as short trades and vice versa. And so this is something that's happening. And this goes back again to talking about why we're not seeing AMC go up. And it isn't because people are selling, but because people are buying, but those buy orders aren't hitting the lit market, and therefore it seems like the price is of course going down. Furthermore, suckers, Citadel's got to cough up the naked short data. Looks like someone's finally pulling back the curtain on the synthetic share circus. And so far as Citadel getting subpoenaed, that's got to sting. Bankruptcy court isn't just about debt, it's about records. And these records might just expose the whole scam. Naked shorts, FTDs, and rehypothecation. This could be the domino that knocks down the whole system. So popcorn, diamond hands, and T+35 on the horizon, you know the drill. So we talked about this yesterday in terms of their positions that are going to be, of course, examined. And now you can see not a single mainstream media outlet has reported that Citadel is being questioned over failure to deliver and naked short selling. Why? Because it could set a dangerous legal precedent, if guilty, that would cause a massive disruption to short hedge funds, the way of doing business. So what we have to understand is, of course, one of the biggest ways that these short sellers are able to make money, or at least on paper seemingly look like they make money, is by these large FTDs, the fact that they don't have to settle these shares, the fact they can naked short these stocks. Now, of course, these are practices that shouldn't be allowed. And so if we are able to crack this down, if we are able to get some sort of way where finally a fine line of regulations in terms of FTDs, in terms of naked short selling, are going to get penalized, are going to get, whether it's banned, whether it's more consequences, then what we could be looking at is short sellers to be heavily struggling. And so that's why we aren't seeing the sort of traffic we are used to for these sort of things. Because if you take a look at, if AMC, for example, were to be questioned, were to be put on these big lawsuits, subpoenaed or whatsoever, then you will see media talking all about it, of course, telling you to sell, telling you to stay away, telling you bankruptcy is near, telling you the end is near, etc., etc. But when it's for these large institutions that are obviously taking advantage of retail investors that are getting this sort of treatment, we don't see it being on blast, because they're trying to obviously protect them. And you can see margin calls knocking, hedge funds leverage is spiraling, and regulators are concerned. Cash future basis trades are piling up like bad bets at a casino, setting the stage for a beautifully catastrophic unwind. If this goes south, expect some Archegos level fireworks, but this time the whole table might flip. Now, we briefly covered this, but it's essentially understanding and going on with what we just talked about, whether these shorts can't use their normal practices, whether it's the fact that 1.75 trillion is being wiped out. What we are seeing right now is these banks, these regulations, who previously had a very loose sort of rules to allow these hedge funds to borrow hundreds of billions of dollars, to then use it on 10x leverage, 100x leverage, to amass these billions, tens, hundreds, if not trillions, billions of these positions. They are now all starting to see it actually go back. Now, of course, this was obviously inevitable. This is something that we expected from the very start, but right now we're finally seeing it really crack down. What was once being contained will obviously start cracking up, and when they can't contain it anymore, when the leverage gets too big, when the risk management gets out of control, when all these collaterals are being evaporated, that's when we'll see, all of these hedge funds really go to zero. And that's why they're worried. So what we're going to be seeing is obviously the tightening now of borrowing, the tightening of lending, and again, the tightening of risk management as well. But that obviously spells trouble for the short sellers, because if they need to protect their risk management by tightening it, then that means a lot of their bad positions have to go. But their bad positions are positions they can't cover, so then that puts them in a loophole that they can't get out, and therefore it will obviously cause them to burn. But yeah, guys, thanks for watching. I'll catch you guys next time.